chat. Welcome to the UTG show.
I wanted to go over a few things here. And this is going to be mostly a TA comparison on the squeeze potential for GME. Okay. And so I wanted to dive into a few things here. And so let's just, at this point, I want to discuss one of the big things here, right, is that we recently, right, exited the weekly flash, right, breaking out of the RSI center line here, making hot coffee, right, on the DMI positive, and then ADX is starting to cook up while it's actually about to cross the DMI negative, okay? Assuming that the trend is starting to strengthen as we are breaking up into it, okay? Now, the $24 level here, right, is very, very important and something to keep note later, okay? 24 bucks. So now the things that I was kind of looking at was I wanted to start off with pattern-wise. Does it make sense, right? Now we know that Ryan and the cat both like to buy in accumulations and reaccumulation patterns based on where they were at. I think it's fair to say that they both know, kind of that algorithm, and Michael Burry ends up kind of confirming that thesis as well, that Ryan understands in which the stock is going to trade, and therefore they're using those hype and spike moments to their advantage. Right, and that also follows the theory that I was never believing that the cat caused any spike, rather than the spike was already going to occur and he was just exaggerating it, right? And so to that effect, right, in recent Michael Burry's paper, he noted that same thing. And then recently, right, that if it does start to go up, the best thing that retail can do is just mass, meme and hype it up to hopefully exaggerate any type of upward movement that we might get, right? And I'm here for it. But I wanted to look at the technicals, right? Because if we're looking at GME today, right, on the 4-hour, right, we have a potential failure swing, right? We've made higher highs on price, but lower highs on the RSI. Now, that confirmation would be this lower peak here, right? About 52-ish. So if it were to go down, that would essentially confirm the failure swing, right? And then you would look for the expected move down. In most normal situations, but we don't really have a normal situation here. Another thing I pointed out in the Discord earlier is that this 50 moving average is piercing or will be crossing through the bottom side of the 4-hour Bollinger Bands while sloping up. That is typically a trend continuation, very bullish, so you should buy the bottom part of that to see, right, continuation. Anyways, besides the point. So let's talk patterns. We know, let's just switch to like the 1 hour here. This is the bottom of the sneeze, okay? We saw a quicker accumulation, right, pattern occur, broke out above previous highs, back tested kind of the top of this range right here, right? Found support right here with the terminal candle that we can see here, and then took off, right? Coincidentally, Ryan loves to buy the flag, the SOS. This is the SOS right at the top here. This this base part, this back test is the BU, the backup LPS, right? The purpose of this is to back test for buyer support. And if buyers are there, to absorb this kind of shitty crackhead teeth, as Jackie would call it, movement back, absorb it all to send it higher. You know, that's kind of the whole point, right? And so in the past, we've seen Ryan buy this several times, including most recently, right? And so we kind of have the same pattern here, right? Right? You had this little mini distribution here that sent it to a floor, right? You have this mini distribution, sent it to a floor. Then you had this, I mean, it's kind of an M, but rounding shape, right? Kind of an M, rounding shape, equal floor, right? Then you had the breakout. You actually do a mini flag. This is the test, the midline support test. If you were to draw a line straight across, you'll see that's very important. If you were to draw a line straight across here, right? See how this was resistance, this was support and resistance, this was resistance when it back tested, resistance, resistance, and then it finally broke through, right? And so we know that in the past, Ryan loves to buy the flag after the kind of rounding formation, right? Because that is, in Wyckoff terms, the best, you're waiting for confirmation, right, for the easiest risk-reward perspective anyway. So anyways, so I thought this was super interesting, right? You saw all of the insider buys. We saw a lot of hedge funds and institutions. We saw them kind of buying this whole area here, right? We saw institutional ownership go up 17% from last quarter. And then you had the insiders heavily start to buy in there, which is a big hint, right? Made that same comparison in my previous video when comparing root, right? Same thing, right? Hit the spring, and then you saw mass insider buy, and then come earnings, the thing sent it, right? So I wanted to just talk about that, right? I think that the structures are damn near identical, right? And also, right, if we go to the original squeeze, looks kind of familiar, doesn't it? Right? You have your mini distribution here to send it to a floor. You get your rounding, and then you get your flag. Could you guess who bought right here throughout this entire time frame? Ryan did. And they're the same fucking thing. Then you got the cat fucking buying all of this. But he wasn't TA oriented right away, right? He was market mechanics and then learned TA afterwards to help sharpen his entries and exits. I don't think that's coincidence. This is the same fucking thing. This is a Wyckoff accumulation. Perfect, okay? Remember what I said earlier about Wyckoff will you want to see, and I'm talking this candle right here. You want to see it break previous highs. Okay? This solid bodied candle broke previous highs. Back tested it, found that buyer support, that BULPS phase, and then it sent it higher, okay? And currently, out of this range, this is the previous highs, okay? we saw that same candle right here. We broke through the previous highs, we back tested it, and we launched out again, making new higher highs, okay? The whole point now is, can we consistently make higher highs, back test them, higher highs, back test them, higher highs? It's the whole thing of these SOS and BULPS phases, right? It's just constant repeat until it turns into a distribution at that point, okay? So let's look at now potentially the scary thing. It could be scary, right? But this is a very, very rare scenario, and I wanted to bring this up, right? So when we look at these two pieces of price action, we see, like I said earlier, RSI making a lower low or a lower high, and then price action making a higher high, right? That is bearish divergence. And so we have the same thing. We have the same thing here. And again, that confirmation point is going to be right there, right? This little bottom valley. You break below that, you confirm the failure swing, typically, right? Except this is where it gets kind of weird, right? This previous structure, and it's on both the squeeze and the sneeze. You end up doing that, but you're making hidden bullish divergence, and typically hidden bullish divergence, right, is continuation divergence. You want to see the trend continue. Even though you're making lower lows on the RSI, you're making higher lows on RSI. So you technically have both, right? But the thing to look for is that even though this is showing right now, we A, haven't confirmed it, and B, this just might be setting up to make hidden bullish divergence and continue making a higher low, right? And that's kind of the thing. So it's a warning sign, but until we confirm A, that lower low on RSI, and B, until we get a puke candle matching the low of this, right? This is the low right here. This candle is this valley. So until you get a candle close below that line right there, which is the 382 it looks like, and you get RSI below that line, that's the point to worry. But right now, we don't have that yet. Okay. And again, you know, just consistently finishing above, right, the daily here, right, daily 200. We are getting buyers to step in and kind of support it there, which is great. And so as of right now, that level, like I said earlier, was 24 bucks. Okay. If you noticed, we've made a flag, like on Wyckoff. We've made this flag, and all you're doing is breaking out of it and back testing it to see if buyers are there to provide support. And again, if you just keep doing this, everything's going to be great, right? So we might dick around here. We might even come back down to here. But as long as we are still technically making higher lows, especially the bodies, that is the biggest thing. It's got to be bodies. If the body of the candle finishes below this, you know, that mark, that not ideal. But as of right now, we're seeing very supportive buyer wicks from the underside finishing pretty strongly here. We're just constantly making, you know, these flags and bouncing out of them. Okay, and so this all looks fantastic, right? I don't have any complaints on this. You know, again, this was the original squeeze, right? And it just kept doing this, breaking out, breaking out, breaking out, making these higher lows and higher highs, up until, right, then you get the ramp up in extreme volume here, and that's ultimately what sent that thing, right? And so that was the squeeze, and so I just wanted to talk here quick about the sneeze, just to show the same comparison, right? Just on a smaller time frame. And we can even see that same divergence on the hourly here. So again, right, this is your accumulation phase, right? Here. You break out, you back test the top of that range, you find support, send you higher, right? Now, right, you have the same bearish divergence here, right? This guy, right? Lower high on RSI, higher high on price action. However, you're still making hidden bullish divergence. You're still making higher lows. You can have both occur at the same time. But in an uptrend, this is going to take precedence over this. Okay? Until you break below that hidden bullish divergence pivot point and you make a lower low with a bodied candle than the prior low. Okay? That's the big difference. And right now, all I see is higher lows, technically, from the bodied perspective. Okay? So if this were to develop the same way, right? We want to have eyes on that. Even though RSI might do something like this, it might even slip below the 50 because GME is tricky like that. As long as you're doing this, right? Technically making higher lows on price action, and you're making lower lows on RSI, that creates that hidden bullish divergence. And you would seek trend continuation from this point up, and this point up. And maybe this will do kind of the same thing and give you a cute little wedge, kind of like this one did, right? Looks like it did a little bounce out there, created this next flag over the top of this structure, right? You can see this flat top, which GME's kind of known for. Wick, 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 wick. Bounced out, back tested the top of that range, found buyer support here, sent it. That's what we're looking for. Same thing, okay? I only say it's the same thing because it's done it a few times now. So why not do it again? The structure itself looks identical, right? And so on the smaller time frames, right? Any time, as of this point, any time we are reaching that $24 level, so basically from here, right, because you see these supportive wicks here, in this particular box right here, this is your support box. Anytime we dip into there, I am soaking all this up. I am buying all of this, okay? And until we get that bodied candle that makes a lower low here and here, right? That'd be the bad scenario. And then you look for further down, and then you're looking at these gap fills and whatever. But until then, I am buying in this box. Basically, anything that touches $24 in the first starting price, don't care the cents, anything in here, I'm soaking up right now. I'm buying it all. Leaps, shares, you name it. The technicals are just too hard to disagree with right now on the macro scale, right? And again, we're as of this point, we're still just making higher lows, price action wise. You know, like I said, the weekly here, you know, you have had this, and here we can even start from the squeeze high here, but you know, draw your nice little trend channel here, right? Got a nice 4-touch top right now, coming up to right the next top potentially. Wise thing would be to take profit in that area, take some off the table there. Now, if this thing does break this and get into the bull zone, that is going to be the definition of this thing is going to squeeze, okay? Maybe it's to $50, maybe it's to 72 and hit that gap fill. Maybe it's higher, I don't know. But this is what you're looking for, right? The three things that Jackie's talked about is you want to have DMI positive and ADX, both 25 plus, right? Because that's hot coffee territory. You want to have RSI over 50 right now on the weekly. That's good to go. It's a check. And then you want to see volume, right? You want to see those big, massive volume candles supporting, right? This price action up. And that's what we got right here. Exactly. Okay. So those are the three things that we need to continue to look for on the macro here. On the monthly, just wanted to touch quickly on this, but you know, kind of the same thing. You're starting to break out of this monthly wedge, right? You're back across center, RSI center, and now you're running into the SMA. Break above that, the thing's probably gone. Okay. Little bit of TA, but kind of a little bit of theory behind it. So looking at the daily here, and actually we can get down to one chart here. So looking at the daily here, and you take a fib time zone. Let's turn off these indicators here. Right, so if you take a fib time zone from basically the high right before the bond, right, and notice kind of these pivot points, right? We did exit a there were actually two different time zones. There was this one that I have here, and then there was another one. And I can quickly see if I can snag it quick. Copy, go back to there. And let's go back to one screen. And we'll paste this guy in. Okay. Back to the daily. Oop, that must have been the wrong one. Apologies. LOL. This is the one I want. paste that guy in. Well, okay, whatever. You're just gonna have to trust me on this one. But if you were to take a fib time zone, and I could probably just, I know where I drew it. I believe it was from here basically to here. Yep. Okay, so take a fib time zone, right, from your 28 high to your most recent low, 1993. And funny enough, right, this is that flag structure that RC loves to buy, right? And coincidentally, we had a fib time zone there. And ever since that fib time zone, which direction have we gone? That's pretty neat, right? Next fib time zone I got is March 11th, okay? We confirm above this golden pocket here, 25 bucks. You know, I think there is a great chance that we just continue to go up into that next fib time zone. And I think that it kind of makes sense, right? If GME is working towards an acquisition of a company, typically, right, what happens is that GameStop, GME being the company to acquire a different company, typically that brings the stock price down, right, because it costs money. And then the company getting acquired, their stock price usually goes up, right? Because you're getting bought out. And so it doesn't make sense for Jimmy to make their purchase right here, because you're creating a scenario to introduce unnecessary price drop to the stock when we know in the past that GME has been attracted to this price range. So why not let the stock run into that price range first? Announce your acquisition. The stock will take a downward turn short term, but ultimately making the overall company stronger, right? And I think that's what he did here as well. He knew the stock was going to rally up in that same 30-ish area. That's why he bought, fun fact, that's why he bought right here, this accumulation structure. You broke out, back test it, see you later. That's why he bought right here, because he knew it was going to go up here. And then that's why he did the bond offering right here, because he knew it was already, the price was already up here and it was going to go down anyways, so take advantage of it. And that's exactly what he did the bond offering here. And yes, it tanked. It was going to anyways, but it stopped here, right? Because that was written in the deal that they couldn't take it any lower at that point. So that's kind of my theory, right? I think that I think it would be wise to let the stock continue the run at least into the 30s. Maybe it's 35, maybe it's 38. That's my target. I would love to get 38. But you know, I think the thing's got to get, you know, minimum 30 bucks before you can make any type of acquisition news, and then see that outcome. You know, but if we can, this would be ideal, right? This is my ideal scenario. I want to see this thing climb, hit that 38. Here, 38, hit that earnings, back test this all-time wedge, right? Buyer support here. And this is rough, right? It could be 32. It could be 25. I don't know. But break out of that wedge, because that would be your accumulation structure. Break out, buy the back test. This would be the acquisition news. Stock goes down a little bit. Buy it here. The thing will go for that golden pocket. Or maybe it's higher. I don't know. I'm not gonna give prices, right? This is just hypothetical. I mean, it could GME could quite literally right now, given the technicals on the higher time frame charts, right? It could very easily, especially on the weekly. We got that weekly flash that it's breaking out of, right? It could very easily just break above. Maybe it even goes up and hits 50 bucks, back test the golden pocket, and go for higher. You know, maybe go for that that gap fill that we've still got at 72 bucks, right? The ultimate thesis, right, is that this entire thing is the accumulation pattern, right? We've talked about this is the same pattern again, right? Kind of the M rounding formation, right? M rounding formation. Then you get your breakout into the SOS right here. That's your SOS. Then a price comes back down to back test the previous highs of the accumulation range. And this is that accumulation high retest. You can see GME did exactly that. It came down, found buyer support at 10 bucks, sent it back up, and now we're just kind of diddling in here until we get that ultimate breakout move outside of this channel, right? We want to see the big move, breakout, back test, and go for higher. Kind of like the same thing on the smaller time frames we were looking at on the squeeze, right? As long as you're making higher lows, that's the whole deal. This is just an extreme macro, and I know my chart's messy when I did that, so deal with it, but you get the gist. So anyways, I think that kind of sums up, you know, what I'm looking for in the smaller time frames. What I'm kind of looking for on the bigger time frames, right? That $24 area is key. To stay above that, to not worry about this divergence here first, because this thing could come down and make bullish, hidden bullish divergence, which is seeking trend continuation so long as we're making higher lows on price action, and continue to rally up into the 30s at the least. We're going to run into, there are definitely some spicy zones up here, and let me see if I can throw on, this is the one that I like to use. We'll turn off the drawings here first. So these are supply and demand zones, right? Untested zones, right? So you can expect there to be resistance in supply zones above us, and you can expect there to be support on demand zones below us, okay? And so right now, if we're already trending up, we know that this $27 to $30 area is an untested supply zone right now. So shall we rally into it? Expect there to be hesitation, because there is a shitload of sellers up here with open limit orders waiting to soak up anybody who comes in here. We touch it, immediately they're soaking it up. The big thing is that we as buyers need to come in here and we need to soak up all of those limit orders and overpower them for us to eventually power through it and make higher highs. Okay. So I expect there to be some problems in that area right off the bat. But, you know, if we can absorb all of the limit orders that are here, all of the sellers that are there, break above it, back test this area, turn prior resistance into support, and launch off of that, you know, that's the big deal. I hadn't really looked at any of these on the higher time frames. I just thought it was interesting. And so we know that this 28 to 30 is that is going to be a potentially troublesome zone to deal with. Looks like on the 4-hour we also have some untouched zones, basically from $34 to $40. So again, there's an ass load of people up here. They got open limit orders waiting to suck up any buyers that come into here. So again, this is basically from 28 to 40. It's going to be a pretty hot zone. But for the interim time, right, you can assume that 23 to 21 has pretty good, it's a demand area for us. We've already proven that buyers are willing to step in at this zone to propel us higher. And so we can just hope that the trend will just continue up into those 30s. Like I said, looking at, you know, March, April, May area, which GME loves to have runs, you know, leading in or during that time frame as well. The other thing that was really interesting today, just wanted to really touch on that, but at the end of the day, we did get a 5K order. And that was for 2027 January, so less than a year out. And they were for $27 calls. I find that to be interesting, just kind of with some of the things that we talked about, you know, with that next fib time zone on March 12th. That $27 price area is that the start of that supply zone above us, where limit orders are going to be absorbed. And so, again, it kind of goes with my theory that we're going to continue to rally at least until probably 27 into March, if not sooner. So, just some fun facts that I thought that was super interesting. And those that 5K block order was also for GME 1, not the regular GME chain. So the GME 1 chain comes with those warrants as well. Although it does come with a wider spread as well. So something to keep in mind, some food for thought. These are my this is my analysis. I think everything looks fantastic right now. I think that, you know, from a technical standpoint, there certainly is squeeze potential on the monthly and the weekly, especially. Everything looks great. You know, accumulation standpoint, so long as we're flagging out and making higher highs and higher lows on the price action, regardless of the RSI, right? As long as if RSI is making that hidden bullish divergence while we're making higher highs on price action, the run is going to continue. And so that's kind of what I'm looking for. Small time frame, big time frame. You know, I think the technicals in general all look great. And you know, I think Ryan chose $32 strike for the warrants for a reason. We've visited that $30 range many times over the last year. I think it's strategically well timed to hopefully announce that on next earnings as we rally into it. And then at that point, the stock will be at a decent price point to absorb any type of immediate stock price drop. Us as retail, not financial advice ever given, but, according to Wyckoff, right? Buy the BULPS. After you hit the SOS, you sell, and then you buy the back test, right? Assuming all of this comes to fruition, it could totally blow up in my face. I don't think so, but I think this is all very legitimate. And as of this point, I really like anything in the 24s, so long as we don't break that lower low on RSI and price action. I really do believe this thing is just going to continue to run. It's hard to say, right? When and if something were to pop off, it's hard to say that it's going to be, it's going to be in 24 days from now. There's just no, you can't time it. For those that do, congratulations. I can't do that. I suck. I can, just kind of give my overall TA here, and so, maybe I'll follow that 5K block order and maybe do something similar to that, and get something just over or just under a year out. But I do think the timing of this acquisition that will probably be upcoming, and then given the Fib time zones running into it, I think that is very well timed, and I'm gonna try and play it the best I can. So that's all I got. Thanks for listening.